This is Terry Smith for ForexTradingSchools.com. This is Forex Trading for Beginners, Part 1. What is Forex? Forex is an international system of exchanging foreign currencies, primarily between large banks who have to simply exchange money. When someone buys something from China, they need to turn their local currency into renminbi. If they buy something from Europe, the currencies have to be converted. And this all happens through the big trading houses in Europe, US, throughout Asia, Japan, Australia. The little people can get a small piece of this action by using a broker. You open an account with a forex trading broker, and they often also do share trading and various other things. You put some money in and you learn how to trade. That's basically it, in a nutshell. Now, what I'm looking at here is the pound US, right? GBP, so Great Britain pound, US dollar. This chart here shows the exchange rate at any given moment on a specific date and time. So this is the M15, that's the 15-minute chart. So each of these candles represents the amount of movement that happened during that 15-minute period. So you can see sometimes we have periods where very, very little happens, and then suddenly we'll have a massive movement. And making money on Forex is all about catching these movements in the right direction. So what you do is simply place a sell order or a buy order against that currency pair. So in this case, if you were here and you had a buy order on pounds, it would have shot up, then you close that position and you've made a profit. In this case, from there to there was 442 pips, 475 pips. What that means is that the exchange rate between pounds and dollars went from, say, around about there, 1.67924, and it very quickly shot up to 1.68441. What that means in trading terms or in terms of profit is that if you had a if you had a long order, that is, if you had opened a buy order on pounds and then closed it at that point there and then closed it right at the very top, you would have made, let's say for a £100,000 order, you would have made of the order of $500 US, that sort of thing. On the other hand, if, say, you thought it was going to do this, right, and it shot up, you closed your order, or you didn't have an order, you saw it shoot up and then paused, you then put in a sell order against the currency pair. That means you're betting that the exchange rate is going to go down. So you put in a sell order, it falls, you close the order and you take a profit. So that's basically what Forex trading is about. How much money do you need to put in? As little as $500. The minimum order is, well, it will depend on your broker. Some brokers have a $1,000 minimum, or rather 1,000 unit currency unit, some 5,000, some 10,000 minimum. By unit, I mean the unit of the base currency. So in the case of this pair, GBP USD, the base currency is pound sterling, UK pounds. So for example, if your broker had a 5,000 unit limit minimum order, then the smallest order you could place would be 5,000 pounds sterling, 5,000 British pounds. Now if you don't want to invest that much, that's when leverage comes into it. Let's say you put $500 in your account. You can still open a £5,000 order, or indeed a £10,000 or £20,000 order. You can get leverage. All brokers will give you leverage of 100 to 1. So $5,000 will give you $50,000 worth of credit to play with. Some brokers will give you a 400 to 1 leverage. The advantage of leverage is that it allows you to play with large amounts of money without having those large amounts of money yourself. The downside is that you can lose all of your money that you've invested into your account in a matter of a second. It only takes 1 second for your entire account to be wiped out. That is the risk. To minimize that risk, you do two things. Firstly, you study everything you can. You read everything on our website and any other websites that you want. The second thing you do is to open a practice account. It costs you nothing to open a practice account. Most brokers give you practice accounts, some only for a month, some for 6 months or 12 months, some indefinite. You open a practice account and they give you 100,000 US dollars of pretend money to play with, and you can use that to practice all of the techniques that you read about on our website and other websites. Then when you are consistently making a profit, or at least on average making a profit, bearing in mind that you will never always make profits. Every trader makes losses every now and then. But when you are consistently making profits on average, you can then open your actual trading account and put some real money in. And that's when you can start making real profits. And it's important to start very small, very slowly, be very, very cautious in what you do. But more about trading psychology at a later time. This is about the basics of what is Forex. So what you're looking at here is my trading portal, which is called MT4, which is MetaTrader 4. There's some brokers provide the newer version, which is MetaTrader 5, MT5. The broker that I'm using doesn't have MT5. Also, if you want to check your accounts, manage your account, manage your trades on the go, if you have an Android tablet or an Android phone or an iPhone or an iPad, there are Android and Apple versions of these trading tools. I commonly use an Android phone and Android tablet for checking up on my accounts and making trades, opening and closing trades. There are certain times of day where you need to be on the ball and you need to be looking at your accounts and see what's going on, looking at the charts. Okay, so this is my actual live account that we're looking at. Now down here are some tabs. You see these tabs, these are different currencies. So that's GBP CHF, that's pound, Great Britain pound, and Swiss franc. Pound, Japanese yen exchange rate. So you can see on here the exchange rate for between pounds and yen is £1, because that's the direction it's going, pound to yen. So £1 is worth at the moment 171.170 yen. Euros versus US dollars, euros versus GB pounds, Great Britain pounds, euros against Swiss francs, euros against Japanese yen, US dollars against Canadian dollars, and Canadian dollars against Japanese yen. So that's the limit of the currencies that I look at. The majority of time I'm looking at pounds US. Right, now what you're looking at here, as I said before, is the 15-minute chart. So each of these candles that you see here or bars, each of these bars is called a candle. The thin line at the top is called the wick, and the thick line, the thick part, is called the body. And the next video will describe more about candles and wicks and so forth. And if I change it to the 1 hour chart, you can see we get quite a different view of what's been happening. So these are days, and I've marked the start of the week, so that's Monday. So from Monday to Friday, this is what's happened. The following Monday, the following Friday, that's what happened. And then last week, this is what happened. So you can see the character of that currency pair in recent weeks. And if we go to the 4 hour chart, each of these candles, oops, there was a bit of a delay there. Each of these candles is worth is a summary of 4 hours of trading movement. Alright, back to the 15-minute chart. Now, is forex trading gambling? You will probably hear people say or discount forex trading as simply just gambling. The truth is, there is a high probability of you losing all of the money that you put in. And I have read that the majority of professional successful traders at some time in their career, at least once, have lost all of their money. That is, all of the money that they had in their account. They've suddenly seen it drop to zero, which is a bit of a scary thing. I have lost a fair amount of money. I haven't lost it all, I've never got to zero, but I've learnt my lessons and picked myself up. Restarted with extremely small trades, and then built up my confidence, renewed my strategy, adjusted my strategy according to the mistakes that I've made, and moved forwards. And now it's a full-time business for me. It's a full-time income. And you can too. So yes, there are risks. Yes, it can be scary. It is not gambling unless you treat it as gambling. The way to avoid treating it as gambling is to study and to implement the various strategies that you see being published by or described by professional traders. If you don't have a plan, if you don't have a strategy, if you don't stick to that strategy, if you jump in, make random rash decisions based on emotion, then yes, you will lose, and you will lose badly and consistently. So, alright, in the following videos we'll teach you how to be a successful trader. Okay, catch you again soon.